Hello and welcome to the What in FinTech podcast. I'm your host Tarang Gupta and our guest today is Sachin Kumar, the co-founder and CTO of Clear Street. Prior to starting Clear Street, Sachin was the co-founder and CTO at Tolo Technologies, an international derivatives high-frequency trading firm with global presence in China, Japan, and Australia. Before founding Tolo, Sachin co-founded his first company, QED Trading, where he led the development of a high-frequency market-making platform. Sachin has a BS in computer science from Michigan University. Join us as we explore the prime brokerage market, how Sachin went about building Clear Street's tech platform, his opinion on the rise in retail investing apps, why he is bullish on embedded finance, and much more. Hope you enjoyed the show. Hey Sachin, good afternoon. How are you?
I'm doing good. Good afternoon to you.
So where are you calling in from?
I am calling in from our headquarters in New York City in 4 World Trade Center.
Oh, awesome. I was in New York last week. It's always fun to be in that city.
Was the weather good or did you get caught in some bad weather?
I got caught in a bit of a rain. So
Okay,
it wasn't
yeah.
cold, but it was just not the best time to be out and about.
Yeah, it's nice and sunny today.
Yeah, likewise in Philly, it's been a welcome relief. But cool, let's dive into the questions. For our listeners who may not know, could you provide an overview of your career?
Sure. So I'm Sachin Kumar. I'm the CTO and co-founder of Clear Street. So my career has been spent largely acting as an entrepreneur. My first company I started back in 2008 was an options market making firm. I did that for maybe 5 to 6 years, and it's a really great experience in understanding how to build a company from scratch, how to build infrastructure, how to build trading technology, and how to, partake in running a U.S. regulated broker dealer. From there, I moved to creating this trading firm that did international trading, so trading between China, Japan, and Chicago. I did that for about 3 years, and sort of the culmination of all of that experience in building these trading firms was kind of recognizing that the prime broker space, which are the kind of the gatekeepers to various different marketplaces, is a bit antiquated, right? So the people that are allowing trading firms and hedge funds to get access to the marketplace, that industry has not really been disrupted. So in 2018, I met my other co-founders, Chris Pento and Uri Cohen, and we started Clear Street to sort of disrupt the prime brokerage market.
So you mentioned you have been a serial entrepreneur now. Did you kind of know that this is what you want to do, or is it by accident?
I don't know if it's so explicit to me, but I did know that I wanted to create a company that had a lot of impact. I wasn't sure in what industry necessarily. So being in finance is sort of a bit happenstance. My first job out of school was at an options market maker, and that what a market maker does and sort of the complexity of options trading, I kind of latched onto that and trying to match that with sort of building platforms and building good infrastructure and building good tech in general is sort of how my passions have been channeled.
So talking about Clear Street, can you talk to us about what the services the company offers?
Sure. So Clear Street is a prime broker. So what is a prime broker? A prime broker is kind of a holistic offering that various trading firms, hedge funds, and other sort of financial institutions use in order to clear and custody their assets, to do risk management, to do securities finance, and to help with execution. Right. So without prime brokers in the ecosystem, it's hard for various institutions to interface with various markets. And so Clear Street is kind of rebuilding that entire stack from scratch, from clearing and custody, from risk management to securities finance to execution. All those things, we're kind of rethinking that from first principles and thinking about how we can make that better by rebuilding some of this legacy tech. A lot of these systems are built on COBOL mainframes from decades and decades ago and haven't been touched in many, many years. And so we think that if we think about these things from first principles, we can deliver better customer experiences and better customer products.
Diving a bit deeper into the prime brokerage industry, how big is this industry? Who are the key players? And Is it heavily regulated?
So yes, it's very heavily regulated. FINRA and SEC are key regulators. In terms of market sizing, I think Oliver Wyman, if I remember correctly, put it around 40 billion in terms of market size, or maybe even more. I think it's a little bit hard to estimate the market size here, but it's quite substantial. And we've just sort of gotten started. We've been in production, I think, call it 3 years. We've been around as a company for 4 years. And to date, we're doing about 2.5% of the U.S. equities market. So there's a lot of market share for us to chew on already.
What was the aha moment when you and Chris decided that prime brokerage is prime for disruption, basically? And how has Clear Street's offerings evolved since when you started to where you are now?
Yeah, it's a good question. So I think for me, it's a couple of things. Number one, in terms of the aha moment, number one is it's an industry that requires a kind of big barrier to entry. You need a lot of regulatory approvals from the SEC, from FINRA. You need a significant amount of capital. This is not something that you can raise, $500K or $1 million as a seed round and kind of just create this in your garage. It requires a significant capital investment. But the other thing that kind of struck out to me is more on the cultural side. I think some of these systems and these platforms are traditionally known as what I would call like back office systems. And so they don't have for lack of a better word, they're not as sexy as some of the things that are in their front office. So there's almost like this adverse selection with respect to the talent and the prioritization and the intention and the money these systems get. And I wanted to change that. I think to me, when something is positioned like that, in the same way maybe payments was positioned with like Stripe or PayPal, when it has those characteristics, it's really ripe for disruption. And so like clearing and custody is a prime example of something that's not viewed as being all that important in an industry, but in fact, it's really, really important. It's literally the bare metal of what allows capital markets to function. And so those things combined to sort of the moment where like, you know what, we could really disrupt this and it could be really big. When we started, we were originally sort of going after customers that are friends and family, people that we knew within our network. These are smaller institutions that needed a home to go to. And then we actually did an acquisition in 2020 of a business in California called Centerpoint Securities. And that was tailoring more towards like active traders. I would classify these as people that sit somewhere above using Interactive Brokers, which is a publicly traded company. It's a big brokerage platform, but below needing like a Goldman Sachs as a prime broker. So we went after friends and family kind of first, then we did this acquisition. I've got these active traders. And now this year, we're really pursuing the larger institutional space, the hedge funds that have 500 million AUM to $1 billion AUM and trying to fulfill their needs. And so that's kind of the next tranche of customers that we're going after.
And when you were building the Clear Street platform, right, how did you go about it? How did you go about hiring the right people to help you build this?
Yeah, it wasn't easy. I mean, I think I personally did a lot of coding myself. So it was me and two other engineers when we first started back in 2018. And this is a constant problem when you're doing a startup: is how do you build and how do you hire and how do you scale all simultaneously? And for me, what I try to do is I zoom in into details and I put in the work that I think needs to get done, and then zoom out and then try to hire. And I cycle in between those two. Now, though, we're almost 90 plus engineers with product and design. We're over 100, and I have great people around me that are facilitating that. But the initial 10 hires is really critical, right? The first 10 people that you hire are really the accelerants and the people that set the culture, the people that set the tone, and allow you to have multiple arms that you need in order to do a lot of things simultaneously.
And sort of follow on to that, is Clear Street hiring right now? If yes, has what you look for in people evolved since the early days, or have the core principles kind of stayed the same?
Yes, we most definitely are hiring. You can check out our website, clearstreet.io/careers. And in terms of what's evolved from when we first started to now, when we first started, I think you are looking for more generalists that can do lots of different things. Maybe they can't go as deep in certain things, but they definitely have a lot of breadth, right? You can kind of throw them at whatever problem you need to solve, and they can solve it. As we've grown and matured as an organization, you tend to look for more specialists, right? That can go really, really deep on a more narrow set of problems and really solve the problems in a way that is very delightful to customers or delightful for internal stakeholders, and really put that polish that you need as you mature as a company.
You also raised a Series B round this year. How did you go about the process of selecting the right investors to partner with?
Yeah, so capital is obviously one part of the equation when you're looking for an investor, but it's also the other kind of softer things, the skills, experiences, and network. Prism was a great match for us because they brought understanding of the space, right? This is a kind of niche space that many people don't understand. So I think they kind of understand what it means to be a prime broker and the things that it entails. And more than that, I think they had a shared vision as kind of being investors themselves and experiencing the problems that they've had as being investors. They had a shared vision of what we're trying to accomplish. So those kind of things intersected in just the right way. And as we look beyond Series B and Series C and so on, those are the similar characteristics that we're looking for in future investors.
And how do you see the vision for the next 5 years for Clear Street? So as of right now, who are your main competitors and key geographies, and how do you see that evolving, or what's your growth trajectory for the next 5 years?
So the mission for Clear Street at a very high level is any product, any market for anyone. Right. So that's what we try to aim for on a day-to-day basis. And it's very incremental. It's a long road to do that. Today, we're doing US equities and US options, but we expand on 3 different dimensions. We expand on asset class, US equities or US options, or fixed income or futures as examples. The second thing that we expand on are geographies. So today, we're mostly US based, but we want to go to Canada, we want to go to Europe, we want to go to Asia. And the third is personas. So I mentioned a couple of personas early in the conversation. I mentioned active traders and institutions, but there's multiple different personas that we can go after. And one of the key insights for us has been kind of a Pareto principle where 80% of the core platform that we build can be reused for different sort of personas, and a difference manifests in the last 20%. So the actual product that you interface with. So that last 20%, you can kind of cater towards an institution, or you can cater towards wealth management, or you could cater towards IRA, et cetera. As we look into the future, that core platform and kind of tuning the last 20% for different types of personas is where we're going to double down our investments and put more emphasis into the future.
How do you strategize against the recent economic uncertainty? Does that have any bearing on your growth plans, or how many customers are looking to onboard?
Yeah, I think for the most part, the brokerage industry that we're in, with facing off with institutions, anytime an institution needs the ability to interact with the market, trade with the market, that is generally good for our business, right? And so even if the market is up or if the market is down, people will need to trade, and therefore for us, it's usually we're neutral to that impact, and it's usually a good thing. When there's more volatility for us, it generally is a good thing because people are doing more. There's more financing. There's more transaction activity. It all sort of lends to our the key levers of our business being turned in the right way. So that being said, interest rates in general are tailwinds for us. They actually help us. Rising interest rates, because we have people's balances on our books and records, and so interest rates increasing generally are good things. So we don't try to predict the market. We don't try to anticipate any of this. We just try to make sure we focus on making our clients happy, giving them what they need, and building great products so that we're there when they want to trade and interact with the market.
Switching gears for a bit and talking about the fintech ecosystem overall, I would love to get your opinion on your B2C investing or brokerage apps. There has been a recent phenomenal increase in these apps in the market. Do you believe that there's still a lot of growth left, or it's kind of become concentrated? And would Clear Street ever consider entering this segment?
Yeah, it's a good question. I think some of that, was episodic and perhaps artificial because of the stimulus sort of function that the government took during COVID. So it's not clear to me that it's going to continue in a straight line up and to the left indefinitely into the future. That being said, I think people over time will continue to get more involved in the marketplace, will continue to want to invest, will continue to want to grow their wealth. So having exposure to that market is a good thing. And we have some. I mean, Clear Street, as I mentioned, Clear Street did the acquisition of Centerpoint Securities. And so we have an exposure to a B2C demographic. It's not as kind of retail-y as kind of the Robin Hoods of the world. But there still are individuals who kind of actively trade and want exposure to the marketplace. And so that's sort of where we've put our investments to make sure we have that exposure and we make sure we are able to cater to that clientele.
And within the broader fintech ecosystem, what are some segments that you believe will really drive its growth in the next couple of years?
So I'm a big fan of embedded finance. I think some of the things that Plaid and Stripe have been able to offer from an API perspective is pretty amazing. In fact, it's something that I want to pursue at Clear Street in the future at some point, where we can offer our APIs publicly, and kind of the platforms we've built internally are offered as a platform as a service that can be embedded in someone's app, so that if they need like a clearing and custody functionality, we can provide that. So I think that has a lot of sort of growth there, and it makes the lives of engineers easier, which I'm quite sympathetic to. The other thing I'd mention, I think, is vertical integration. I think there's been quite a bit of fragmentation in fintech, with people carving out the various functionalities of what a traditional bank was, and creating break products of it. But now I think it perhaps has in certain areas gone too far, and I think you might see some roll-ups and aggregation of certain things. And you hear Elon Musk talking about the super app, right? That's an example of something of that sort. I think more vertical integration will happen over time.
And as a flip side to that, do you believe that there are some segments that you're bearish on, or you feel there are segments that are past their prime or heyday?
So I think bearish might be too strong of a word, but I think neobanks, as an example, there's quite a few of them at this point. And I think there you might see some players trying to vertically integrate, trying to create that super app where it's not just banking. You add investment, you add wealth management, fractional shares, etc. So I think the trend towards a super app would happen with some of these neobanks.
But do you feel that the incumbents, the big 4 or 5 banks in the US, are better poised to achieve that rather than some of the neobanks going upwards?
I think startups generally can innovate quicker than banks. I think the neobanks, like the Monzos of the world, are in a good spot to actually achieve something like this. But banks have great people as well. It's anyone's game, but it's really about who can move the fastest and the quickest.
And for the last segment, what I'd like to do is have a round of rapid fire questions to introduce you more as a person to our listeners.
Sure.
So my first question to you is, what is a fun fact about you that most people don't know?
Poor font selection annoys me quite a bit, often, I think irrationally so. A bit of a font snob. So presentations and decks that I see don't have the right font, it's a bit, I can get a bit cantankerous over that. So that's a fun fact.
You sound like you were a consultant in the previous life.
Maybe, right?
If money was not a constraint, what would you be doing?
I think I would be coding more, because I'm at my heart, I'm an engineer. I will most definitely be doing something with OpenAPI. ChatGPT is amazing. Probably doing something in Rust. So I think I'd be on a beach somewhere coding something up that may or may not be useful for somebody.
What are some risky career moves that you made, and what was the thought process behind them?
I think much of my career has been quite risky since I had started multiple companies. So much by definition, it's a bit risky. And for me, it's sort of thinking through what was the expected value of a really great outcome. What's the expected value of a median type of outcome, or like a mediocre outcome? And then what level of fulfillment would I get in each, and what is the probability of success of each? So that's kind of the rough high-level mental model that I've used. And maybe the last one is regret, right? Like if I didn't do this, would I regret not doing it? And as an example, my last trading firm that I co-founded, that was trading in China, Japan, and Chicago, I flew to Hong Kong and I lived there for a better part of a year without any real idea if this is going to work. But part of the decision making there was, would I regret not doing this and passing it up in retrospect? And you can never know that, but for sure. But it's sort of a good test mentally. It's like, if I pass this up, am I going to think back to this and be, I should have taken my shot? And so that's been my kind of mental model for most of this stuff.
And when you were thinking about these probabilistic outcomes, right, was your philosophy more of go all in and sort of burn the boats, or did you have a plan B, option B in mind in case your startup or venture didn't work out?
No, I think you go all in. You don't try to hedge. The hedging sort of reduces the probability of success. So you have to go all in, and I always was all in.
What is your favorite fintech app on your phone?
Oh, good question. It used to be Robinhood. I used to use that a lot. But outside of that, I don't know if I've used anything recently that has been amazing for me. So yeah, I think Robinhood was especially when it first came out, I was like, this is going to be big. This is really easy to use. But outside of that, I don't think I have one that I would call out.
I know I'm a bit off track here, but recently there's been a lot of debate about whether Robinhood and similar apps are a force for good or for bad, given the fact that they put so much power in the hands of retail investors who may or may not know how to wield it properly. What's your take on that?
Yeah, it's a good question. I think it's probably both, right? I think it's done a lot to surface capital markets to a large swath of people that may have not been introduced to it, or may have been introduced to it later in their lives. So on that side of things, I think it's important for people to know what capital markets do, why they're there, why they're important for capital formation. So that from that perspective, I think it's done a good job. That being said, the flip side, of course, is that it can lead to risky behavior and people not knowing exactly what they're doing. But I think innovation tends to have that risk, right? Where you're trying to do something and surface something to an audience which has some sort of unintended consequences. If you actively and deliberately kind of address those unintended consequences over time, I think you can try to maximize the good that you're trying to do. So I wouldn't ever sort of sit here and try to disparage another sort of company or app, but I think they're trying to address those issues, right? And I wish them all the luck in the world in addressing that.
Question is, and I think you are the right person to answer this, you have had multiple startups. Is there a replicable formula that you use each time in terms of how to get the initial customers on board, how to think about which problem to tackle, that has helped you achieve success?
I think if I can distill it down, it would be, and this might sound kind of trite, but zooming in and zooming out has been extremely important to me. And what I mean by that is sometimes you can remain completely zoomed out where you're thinking only about strategy and you're only thinking about vision and you're thinking about high level, right? And of course you need to do that, but that level of abstraction has to be grounded in like raw details. And if you don't zoom into the details, your abstractions and your high level thinking could be very baseless. And so I try to consciously kind of go in and out of that. And for me, what does it mean to be zoomed in? For me, it's actually looking at code, looking at our actual structure of how we're designing our architecture, our engineering sort of processes and ceremonies. Are they functioning well? Do they work? And then forcing myself to then zoom out and think about, okay, how does all those details, how do they map to the vision and the road mapping? I think what I've seen is sometimes people get stuck on either side of that, right? They're too much in the details and they can't get out and see the broader picture, or they're just perpetually high level and can't see the details. And they'll make sort of stories of why they need to remain on either side, right? It's very common to kind of convince yourself that, yes, I just need to be looking at this code. I can't be distracted. Or I need to think about the business as a whole. Coding is for someone else. It's not my job. And actually that right there, that phrase, it's not my job, is incredibly dangerous. Like you should never be thinking that anything that your company needs is not your job, because it's all your job. It just depends on you having the wisdom to know when it's supposed to be your job. And that's sort of the key thing that I've used and learned.
And how did you sort of check or balance to make sure that, okay, now I have zoomed in enough, I need to take a broader view. Oh, okay, this is enough abstract thinking or strategizing, I need to go to work. Is it your co-founder, someone in your team, or is it something you do yourself?
It's some largely based on intuition. If I'm being honest, I don't have a magic sauce, but a healthy dose of questioning yourself is often useful, like asking yourself if should I be focused on something else, or I spent too much time on this, and not sort of telling yourself that you're right all the time. Like questioning yourself is really important. I'm highly skeptical as an individual, and I'm probably most skeptical about myself. And so every week to every 2 weeks, I'm asking, like, what am I missing? What am I not spending enough time on? That sort of helps me guide. And of course, bouncing ideas off your co-founder. I talk to my other co-founders a lot, and that helps you tune those intuitions and tune whether you're focused on the right things.
And I know you're a technical person, but if you had to give one piece of advice, or how would you advise a person in business school who wants to enter a fairly technical or wants to be part of a fairly technical venture, how could they go about building those technical chops that are needed to be successful?
So I think you could obviously take the classes and take the courses, but even if you didn't do that, there's so many online resources. I mean, most of the things that I've learned from a technical perspective didn't come from school necessarily, right? I actually learned them outside of school. So there's no shortage of free resources to understand at least enough that you can build the mental models of how this works. And so you can have better intuitions and engage in better interactions with technical people. So even me as a CTO, there's technology out there that I don't know, but I need to know generally what they do so I can engage in thoughtful conversations and potentially use them at Clear Street, et cetera. And I'm constantly trying to learn what those things are on a week-to-week basis. So, Hacker News, you should read Hacker News as a minimal thing you could possibly be doing, and continuing that sort of curiosity of how this stuff works, and engaging in people that are more technical, and seeking those people out that are more technical is always a good thing.
On that note, Sachin, we'll let you get back to work, but thank you so much for joining us today.
Thank you so much. Take care.
Thank you for listening to today's episode of the What in FinTech podcast. If you like the show, then please show us some love on social media or consider leaving a review. It means a lot to us and helps spread the word to more listeners. If you want more content from our FinTech community, please subscribe to our podcast and find us on LinkedIn, Instagram, Twitter, and Medium at What in FinTech. There you will find interviews, articles, videos, and much more analyzing all aspects of the industry. As always, special thanks to our editor, Rafael Osteria. Signing off until next time, I'm your host, Tarang Gupta.